Regulators and financial intermediaries. Investing in equities is an important investment that we make in order to generate inflation beating returns. This was the conclusion we drew from the previous video. Before we move further into this topic, it is extremely important to understand the ecosystem in which equities operate. Just like the way we go to the neighborhood kirana store or the supermarket to shop for our daily needs, similarly we go to the stock market to transact for equity investments. The main purpose of the stock market is to help you facilitate your transactions. So if you are a buyer of a share, the stock market helps you meet the seller and vice versa. There are two main stock exchanges in India that makes up the stock markets. They are the Bombay Stock Exchange, that is BSE, and the National Stock Exchange, that is NSE. Stock market participants. The stock market attracts individuals and corporations from diverse backgrounds. Anyone who transacts in the stock market is called a market participant. The market participant can be classified into various categories. Some of the categories of the market participant are as follows. Number 1. Domestic retail participants. These are people like you and me transacting in markets. Number 2. NRIs and OCI. These are people of Indian origin but based outside India. Number 3. Domestic institutions. These are large corporate entities based in India. Classic example would be the LIC of India. Number 4. Domestic asset management companies, AMC. Typical participants in this category would be the mutual fund companies such as SBI Mutual Fund, DSP BlackRock, Fidelity Investments, HDFC, AMC, etc. Number 5. Foreign institutional investors. Non-Indian corporate entities. These could be foreign asset management companies, hedge funds, and other investors. When money is involved, human emotions in the form of greed and fear runs high. One can easily fall prey to these emotions and get involved in unfair practices. India has its fair share of such twisted practices, thanks to the operations of Harshad Mehta and the likes of Ketan Parekh. Given this, the stock market needs someone who can set the rules of the games and ensure that people adhere to these regulations and compliances, thereby making the market a level playing field for everyone. The regulators. In India, the stock market regulator is called the Securities and Exchange Board of India, often referred to as SEBI. The objective of SEBI is to promote the development of stock exchanges, protect the interest of retail investors, regulate the activities of market participants, and financial intermediaries. In general, SEBI ensures the stock exchange, that is BSE and NSE, conducts its business fairly. Stock brokers and sub-brokers conduct their business fairly. Participants don't get involved in unfair practices. Corporates don't use the market to unduly benefit themselves. Example, Satyam Computers. Small retail investors' interests are protected. Large investors with huge cash pile should not manipulate the market. Overall development of markets. Given the above objective, it becomes imperative for SEBI to regulate the following entities. The entity should operate within the legal framework as prescribed by SEBI. Credit rating agency. They rate the creditworthiness of corporate and governments. If a corporate or government entity wants to avail loan, CRA checks if the entity is worthy of giving a loan. Example, CRISIL, ICRA, and CARE. Debenture trustees acts as a trustee to corporate debentures. When companies want to raise a loan, they can issue debentures against which they promise to pay an interest. These debentures can be subscribed by public. A debenture trustee ensures that the debenture obligation is honored. Example, almost all banks in India. Depositories acts like a vault for the share that you buy. The depositories hold your shares and facilitate exchange of your securities. When you buy shares, these shares sit in your depository account, usually referred to as a demat account. This is maintained electronically by only two companies in India. Example, NSDL and CDSL. Depository participants. Depository participants (DP). You cannot directly interact with NSDL or CDSL. You need to license with a DP to open and maintain your demat account. Example: most of the banks and few stockbrokers. Foreign institutional investors (FII). These are foreign entities with an interest to invest in India. They usually transact in large amounts of money and, and hence their activity in markets have an impact in terms of market sentiments. Example: foreign corporate funds and individuals. Merchant bankers. If a company plans to raise money by floating an IPO, then merchant bankers are the ones who help companies with the IPO process. Example: Axis Bank, Edelweiss Capital. Asset management companies (AMC). An AMC collects money from the public, puts that money in a single account and then invests that money in market with an objective of making the investments grow and thereby generate wealth to its investors. Example: HDFC AMC, Reliance Capital and SBI Capital. Portfolio management systems (PMS). They work similar to mutual fund except in a PMS you have to invest a minimum of 25 lakh rupees. However, there is no such cap in mutual fund. Example: Religare Wealth Management, Parak Parik PMS. Stockbrokers and subbrokers. Whenever you want to buy or sell shares from the stock exchange, you have to do through registered stockbrokers. A subbroker is like an agent to a stockbroker. Example: Sher Khan, Upstocks and Dhan. Financial intermediaries. Stockbroker, depository and depository participants, banks, NSCCL and ICCL. The stockbroker. The stockbroker is probably one of the most important financial intermediaries that you need to know. A stockbroker is a corporate entity registered as a trading member with the stock exchange and holds a stock broking license. They operate under the guidelines prescribed by SEBI. The basic services provided by the stockbrokers includes give you the access to market and letting you transact, give you margins for trading, provide support, dealing support if you have to call and trade, software support if you have issues with the trading terminal, issue contract notes for transactions. A contract note is a written confirmation detailing the transactions you have carried out during the day. Facilitate the fund transfer between your trading and bank account. Provide you with a back office login, using which you can see the summary of your account. The broker charges a fee for the services that he provides called the brokerage charges or just brokerage. Depository and depository participants. When you buy a share, the only way to claim your ownership is by producing your share certificate. A share certificate is nothing but a piece of document entitling you as the owner of the share in a company. Before 1996, the share certificate was in paper format. However, post 1996, the share certificates were converted to digital form. The process of converting paper format share certificate into digital format share certificate is called dematerialization, often abbreviated as DMAT. The share certificate in DMAT format has to be stored digitally. The storage place for the digital share certificate is the DMAT account. A depository is a financial intermediary which offers the services of DMAT account. To open a DMAT account, you need to license with a depository participant, that is DP. A DP helps you set up your DMAT account with a depository. A DP acts as an agent to the depository. Needless to say, even the DP is governed by the regulations laid out by the SEBI. Banks. Banks play a very straightforward role in the market ecosystem. They help in facilitating the fund transfer from your bank account to your trading account. Three financial intermediaries operate via three different accounts: trading account, demat account, and bank account. All the three accounts operate NSCCL and ICCL. NSCCL, National Security Clearing Corporations Limited, and Indian Clearing Corporations are wholly owned by subsidiaries of National Stock Exchange and Bombay Stock Exchange respectively. The job of the clearing corporation is to ensure guaranteed settlement of your trades and transactions. This was the information regarding regulators and financial intermediaries. You just need to be aware that there are certain professional institutions which are heavily regulated and they work towards smooth settlement and efficient clearing activity. Thank you.